How's it going? Today is Tuesday, the 23rd of April, 2024, and this is the second day in a row that the S&P 500 futures has closed up relatively large. Yesterday was just under 1%, and today is just over 1%. With those two large up days, IV has absolutely been crushed. It went from 70 to 35, so basically cut in half, and then the P&L has made a roaring comeback. This is the second day in a row that my total P&L for all the positions is above $100. I think yesterday was pushing $200. I track my P&L at least on a weekly status. Sometimes I call this a daily status, but it's usually more like a weekly status. And the last time this futures account was anywhere near 1922 was back here in early February. Looks like on the 9th of February, I was higher by a few dollars at 1931. So ever since then, the markets were moving against me and it just kept going down and down and down. And then, just a couple of days ago, on Friday of last week, I was way down at 1754. Now I'm up at 1922, so I'm almost up $200 in the last two days there. Obviously that can change if the markets decide to reverse again. And then similar story here, not quite as big a gap, but the market really sold off, and on Friday I was at 2630 and now I'm at 2823, so almost $200 higher for that account too. I did open one trade today, and it was technically a long put ratio spread, and I've deemed it the Fatty 12, which is ironically a family inside joke. But it's just one short put with two long puts, and it starts at the money, and the two longer puts are farther out of the money, so I actually get a credit for it. And yeah, I figured, why not? Fatty 12. If we take a look here, you just start here with a long put ratio spread, hit go, and then I went at the money with the short, so it's only one short, and then two out of the money, which are those the right strikes? 5150, 4800. 5150, 48. Yeah, so there we go. And looks like after hours is not showing a very good bid-ask spread. It goes from 120.5 credit to 45 debit. So that's not accurate. I was able to get a credit of 3250, which with the futures multiplier is 162.50 real dollars. So let's put 3250 in here. All right, so I sold it for 3250, which is, I adjusted this to lock it in because otherwise these spreads are really far off. Oh, actually they have regained some normalcy. Anyways, so this is what the curve looks like. This is really aggressive, so if it stays above at the money, to infinity, I'll make $162 at expiration. But the reason I went for this is because it frees up some more buying power, and I was pretty tight on buying power here, so it's nice to get a little more cushion, but it gives me that by opening a credit instead of doing something for debit. Like last time I just bought a naked put for like $50 total to free up that buying power. So now I did this at the money, which my pop is much lower. It's only 65%, but that's still a lot better than 50-50. And then this is really just kind of like a short to medium term play. In theory, looking at all the time decay and stuff, after about 30 days, you start to lose a lot more value. So right now, let's say today it crashed down to 4,900. I'd only be down about $21, $22, even though this you know, Valley of Death looks really scary at negative 1587. You know, that doesn't come into play until much closer to expiration. So right about in here, looks like negative 25 is kind of my lowest, how much I would lose here, right? If it melted down tomorrow. But then if it really starts to melt down, you know, once you hit, I guess you start making money somewhere around 4,800. And then, you know, the more you go down, obviously the more you're going to make. So if for some reason the market crashed 10% tomorrow, you know, I'd be making hundreds of dollars. And that's all because even though I have a negative one here that collects more credit, I have two longs here, which ultimately will outweigh any massive move. Granted, to see any sort of like real profit, you know, the market would have to move like 10% in like a day or two. Not really likely, but definitely more likely than the Black Swan hedge that all these other YouTubers seem to like and use. So this is for today's date. Let's go out 1 month. So 423, let's go to 523. And so 115, you know, minus 30, that's down at like what, 85 days, give or take. And now, you know, this claims it doesn't affect anything. Like, even if it moved down here and stayed, I'd still be down only about $25, which I'm not sure if that's accurate or not. Definitely this orange line doesn't seem to reflect reality with Tasty Trade, so I don't know if I'm doing something wrong or whatnot. I definitely noticed if you use the per contracts, you get a much more accurate display. But other than that, I'm not sure what else. I mean, this would say I'm down 183, but I don't know. I don't think either one of these are right. So for argument's sake, let's say 25 to 183. I don't know. Maybe we'd be down $50 or $100, right? Well, if we go out another month, so 60 days in, so now this line here, you know, the kind of worst case significantly accelerates. Now this says negative 400, right? If it came down here, and if it was still up in here somewhere, it's negative 300. So with that in mind, I'm basically, the plan is right now to take this off at like 30 days, not 30 days, to take this off at 30 days of time decay. So it's at 115 right now. At, you know, 85 DTE is when I would take this off, because unless the price has moved up a lot, right? Because otherwise the Valley of Death starts to come into play here once you get under 60 days. Like basically once you start to lose roughly half the time decay or more, then this Valley of Death really starts to kick in. So at least in theory, that's what this is predicting. So I'm gonna have to keep an eye on it. If I start losing a lot more than $25 right off the bat on a down move, I will definitely reconsider closing this early. But for now, that's the plan. So come back here, and this is why I make little notes here. So I call it the Fatty 12, and I said 50% of max profit or 30 days. So maybe I should change that to 50% or 85 DTE, which actually that sounds like a good idea. I'm going to do that right now. So rename, and I'll call it Fatty 12, 50% or 85 DTE. If the market keeps rallying hard like this, I mean, I'm just going to be making a lot more money, seemingly just as fast, if not faster, than I was losing it. So that'd be nice. Otherwise, if the market decides this is a dead cat bounce and falls off, you know, this one is a 61% pop, but this one here is greater than 99.5%. This one here is 95%, and this one here, which is much shorter duration, is at 99%, right? And then these are all hedges. So this is the hedge I bought the other day for what's that, 48.50 of real dollars, 970 trade price. And that reduced, you know, that increased my buying power by about $300. And funny enough, this Fatty 12, even though I got a credit, increased the buying power by about $300. So we'll see how it plays out. If this does turn against me, I don't know. Maybe this will start to use a lot more buying power. But it seems like a good idea. So we will find out. It's so funny because everybody was talking about how the market's waiting for Tesla's earnings today, blah, blah, blah. And Tesla's earnings came out. Tesla had a pretty big jump up, but the market did absolutely nothing. So it's just so funny. I mean, maybe later this week, I think there's some bigger people like Apple and whatnot, but it's so funny. Nobody knows a damn thing. But anyways, I guess that's it. Thanks for tuning in, and I'll see you later.